Okay, investment strategy, buy to let. So, buy to let, BTL. Generally, most investors are looking for a minimum of 8% gross yield. They're starting to consider maybe a little bit less, 7%. But the reality is, London and the south, not as high as this. You're looking as low as potentially 3% gross. But generally, the 8% in the north is the number that most investors are looking for as a minimum. Again, it's very area specific because some areas in the north, in particular in cities and towns, and in certain areas within those towns, even 8% isn't enough because of the type of tenant that you're going to be attracting. So in lower demographic areas, housing benefit areas, for example, investors tend to be looking much higher. If it is in a more affluent suburb where the capital appreciation, the capital growth is going to be higher, then they may look at less than 8%. So 8% is a good round figure to work from generally. And they're looking for as low a purchase price as possible because, again, as we mentioned in the below market value video, they're looking to recycle their initial investment. So whatever they put in at the beginning, they're looking to recycle that through refinance. So we're looking to try and get the property as below market value as we can in order for the investor not to have to leave as much capital in the deal. And the really important thing with buy to let is the location, the tenant type, the property type, because we're holding the property. The investor is going to be holding that property, and they're going to be holding that property with a view to hopefully having it full in terms of tenanted for as long a period of time as possible. So we've got to make sure that there's tenant demand. We've got to make sure that we're presenting all of this information to the investor with a buy to let deal, because the biggest reason for a buy to let is for an investor to hold that property for as long as possible to get capital appreciation whilst generating a cash flow in the short term. So if you get a property that is in an area where the tenant demand is not high, you could end up with an empty property. Investors not going to be happy, and again, all of this can be presented to the investor for them to make their own decision. Remember, as a property sourcer, as a deal packager, it's our job to let the investor know all the pros and the cons. Don't try and hide anything, because ultimately it's up to them to do their own due diligence. We just need to present them with all the information, as much information as possible. So on the buy to let strategy, we need to make sure that they know what the area is like. So an area report of the tenant type, the demographic, the types of property, the tenant demand. All of this is really important so that that investor isn't left with an asset, not a liability. So really important things to consider. Now, investors are starting to come back to single lets, and they went away from them for a while because of all the investment training companies teaching everyone that they need to be buying HMOs and service accommodation and everything else. But the more experienced investors, the savvy investors, are reverting back to single lets on a long-term hold strategy. Now, there's a lot of change going on at the moment with regards to mortgage interest relief, Section 24, etc., etc. Now, what that means is that we just need to factor all of this into our numbers, because ultimately a good cash flowing single buy to let property will remain a good solid single buy to let property. We just need to factor in the costs, the additional costs that are involved. So really important to consider. They can be calculated as a service accommodation as well, in order to offer alternative income generation opportunities, but we need to make sure that the first point of reference is the single buy to let calculator, so the current market rent and the cash flow on a single let basis. We can present the service accommodation model to them if we feel that it's applicable, suitable, but if not, just do it as a single buy to let. And with buy to let properties, what's really good from a sourcing and a deal packaging point of view is that there's an opportunity to help investors build a portfolio, and because once you've got one, what you can do is look to source more in that area, because of course if you've got a property that works, you know how to refurbish it and you know how to let it. The point is you can just rinse repeat that in the local area. That is how buy to let portfolio building used to be, and that is how it still is. And for us as a property sourcer, that's a perfect opportunity to have a very experienced investor who's got the capital to be able to do this. We can work with them and build up the portfolio. It just prevents a load of time wasted with newbie investors or new investors or building relationships. We can work with a single investor, work very hard with them, build a portfolio for them, make consistent income from sourcing fees. We can make referral commission from mortgage companies, solicitors referral fees, etc., etc. It works really, really well, and you can do this with all the strategies, but buy to let's a really good one because it's if they're looking at building a buy-to-let portfolio, the reality is most investors don't just want one, they maybe want 3, 4, 5, and you can build this up over time, building that relationship. And that investor is more likely to go on to more advanced strategies moving forward as well. So really, really important thing. And existing rental properties are ideal for this strategy. So finding properties that are currently on the market for rent, you can approach landlords and see if they're prepared to sell. So you can do that direct to seller, or you can do it via estate agents. Very straightforward. Estate agents will tell you that low yields are good for the area. Don't believe them. Do your own research, work out what yields you should expect, and make your offers based on that, not on estate agents' advice. And that's the buy-to-let strategy.